Developer Network for another Sunday session, and today we've got a very special guest, Mike Bristow, CEO and co-founder of CrowdFunding in the UK. Now, you started in the UK, but you've actually started crowdfunding in Australia about 18 months ago, give or take?
Yeah, it's I think it's about 14 months ago, and I was actually due to be out here for that launch, but there's this small thing called the pandemic going
Damn
on.
COVID.
Yeah, exactly.
So I guess tell me a little bit firstly, what is CrowdProperty, and I guess coming from a crowdfunding type movement, but how and why did it actually come about in the UK firstly, and then why the segue over to Australia?
Yeah, great question. So actually, a few of us got together way back in 2013 and said, hasn't it been, and quite frankly, a pain in the arse funding our projects? So we really felt the pain of sort of traditional sources of funding like banks and things like that on our property projects, our development projects. And we said, well, there must be a better answer. Surely we can build a better lender. And I don't think I'd be too controversial in saying that we didn't think that financial services as a whole, and especially in this space, is particularly customer focused. I don't think I'm controversial saying that, and I don't think that's different in Australia particularly.
No, they tend to only lend you the money the moment you can prove that you actually don't need the money.
Exactly.
Yeah.
Exactly. Yes. Yeah. Which is very unhelpful, right?
Yes.
So we said, right, let's build a better lender. Let's really understand from our perspectives, what do we want in our funding partner. And if you start from there, you recognise the pain and you work out how to solve it yourself. You think about the customer. The only challenge then is well, okay, you can build a lender, but you need the capital from somewhere as well. And there's really interesting sort of evolution of marketplace lending at the time in the UK with big businesses like Funding Circle, and we felt, well, that was a good source, and we could build a disruptive, disintermediating model. And that's exactly what we went and did.
So for the people, by the people.
Exactly.
Absolutely. And at the time, you, I guess, worked with another networking group very similar to Property Developer Network called the Property Investor Network. Yeah. So there are lots of synergies between how you've grown in the UK and how you're growing out here in Australia. So tell me how that relationship worked with Property Investor Network, and how did that actually help you guys to, I guess, build that symbiotic relationship?
Yeah, and that's a really good question, because so one of my co-founders is a guy called Simon Zucci. He's quite well known in the UK, a bit like yourself over here, in that, and that was a natural place to talk about a better source of funding, and so we did that. We funded a load of people in that network, proved that this was relevant, proved that this was better, okay, and then we went on a national level, and now we've backed almost £500 million worth of projects in the UK, and I guess starting to explore internationally.
So when you say $500 million, you need to kind of go, $500 million.
And a cat.
Yeah, I've got the cat at home. For anyone who's been watching regularly, you will have seen my little white cat. So when you say build a better lender, what were the problems that you were actually seeing? Like when you're trying to fund your deals, how were your deals being assessed, and why were they getting knocked back, and what were the challenges that you had in that process?
So the biggest challenge that we felt was, so big banks felt they sat in their ivory towers, they had a big stick and they could hit small and medium-sized developers. And that's actually if they funded them, right? Because it was no accident that we founded this in 2013, which was a few years after the global financial crisis, right? Before, in the UK, before the global financial crisis, small developers built around 30% of housing, right? Post-global financial crisis, small builders built about 10% of new house building, right? And that was predominantly driven by banks making it more difficult to borrow, and actually just turning off small builders, right? They said, actually, do you know what? It takes the same time to assess a £500,000 loan as it does to assess a £20 million loan, right? So forget the 500,000 ones. I'm going to go just back the 20 million ones, and so a multitude of factors like that, and then on top of it to say, well, actually, they considered it, the cost to serve those developers was too high, and the sort of the indifference, especially around timing. They didn't really understand what the developer needed. Actually, a developer needs quick decisions, good decisions, access to decision makers, actually some transparency about the process and the terms and all of the factors around it. And you know, major banks failed on all of those levels, right? And you know, we see a load of those trends in Australia, and that's why we're here, right? And that's why we're building the business here.
Well, I can speak to the first ever development deal that I did. Took me 5 months to get an approval. And like you said, if you're waiting for that during your due diligence process or whatever, that's a deal killer. Like you have to back out because you've got no certainty in actually pushing through. But the stats that you commented on here, I guess very similar kind of stats but almost at the opposite end of the scale. So we have anywhere between 80 and 90% of all development applications that go through council are a 6-pack and below.
Yeah.
And so the big developers get all the kudos, they get all the money, but it's the little guys, us folks, that are, I guess, the ones that are actually doing all the infill developments and the more creative solutions and the things that people actually want to see in our community, the different product that actually sits out there.
And that's the big picture problem was in the UK. So some of that slack was caught up by large developers. But large developers need large sites, right? Actually, strategically as a country, you need the small developers to do the infills, small conversions. We can look out of this window and see 20 sites that we could develop tomorrow, right? Yeah. A large builder would look out of this window and see none, right? Yeah. So, you know, and that's why it's so important. We can build houses and you know, redress that supply and demand balance, ensuring affordability, etc. And there's crucial factors at a country level as well. Yeah,
absolutely. And from a council perspective, it costs them to build roads, it costs them to put sewer networks and train lines and stations and libraries and all that sort of stuff. So if they can keep the stuff where it already is and do the infill development, it actually makes more sense, like you said, as a country, to actually fill in the gaps in between.
Exactly.
Yeah.
But I think the really interesting thing that we also overlaid that with, so it's a problem at a big picture level, but also if you come back to the customer, so you, I, the people who are watching, you know, who want to do those sites, right? One of the biggest risks to everyone is you do a load of work and then you don't win the deal, you don't win the project, the vendor doesn't pick you or the agent doesn't pick you or whatever. And what you really need is, if you've found a great deal, okay, and you're spending all of that time, what you want to do is close that, right? Yep. So how do you line up every single piece of competitive advantage versus the 5 other people that are bidding for it, right? And one of the ways is to have a finance provider that'll act quicker. Yep. Because then you're at the front of the race, and we've seen so many instances where we've delivered quicker decision making, quicker proof of funds and backing, okay, and our developers that we're working with have been front of the queue. They've been selected, and they haven't always bid the highest price in the with the agent, and that's actually quite profound. And that's because every vendor has a different need, and sometimes that need is certainty. They want to know absolutely categorically this is actually going to happen. Yeah. Because in many times they've actually already emotionally spent that money on the next purchase, or that, you know, they need those funds urgently for whatever next stage of life that they're actually moving on to. So it's not always price. Yeah. Exactly. And that's where I think the bit. I mean, lots of people will have their teams of people, right? And we observe this in the UK, where a developer might have their architect, their quantity surveyor, their planning consultant, all of this. And these are probably British terms that I don't know the exact translation, but
almost.
But never did they really have the lender, a finance provider, a development finance provider in their regular team, because there just wasn't that partnership sort of approach. And our sort of vision was to say, right, okay, well, we're going to be part of that team. We're going to be the finance provider, okay? We're going to sit there as a partnership, a sort of a balance of equals, right? Not this ivory tower, big stick. It's more adversarial in the past, where it's kind of, you know, I need it, I want it, and you're kind of held over a barrel to, you know, you can have, but only if you do this, this, and this, right? Exactly. Yeah. The number, the sort of the hoop jumping. We do these focus groups, and one thing came out of it is, like 3 or 4 months later, they were still asking for more documents, describing their experience with the bank. And I think I was presenting that slide at one event, and someone said, no, that was 8 months for me. Yeah. 8 months, you're not going to win that deal if your finance provider is asking you questions for 8 months.
No.
Okay. So
that also comes at, I guess, a perception from, I guess, developers that they're trying to go for the lowest interest rate. And what we really want to start to consider, and this is where I think a lot of developers actually get it wrong, that the interest rate is a small portion of all the costs. If you're waiting 8 months for a decision, that's 8 months with a holding cost. So sometimes you're better off to pay that 1% higher to get that faster decision. I'm not saying you guys are 1% higher, just for the record. But the speed, sometimes it's more about that the speed actually saves all these other holding costs that add to the cost of your project that we kind of forget.
And that's absolutely right. And in our research in both the UK market and the Australian market, what we generally find, is when we ask relatively inexperienced developers what's important, they say LTV, interest rate, and fees.
So I'm going to convert that. So, so LTV, so it's loan to value ratio so LVR in our instances. What was the other one you said? Interest rate. That equals interest rate.
Yeah, and arrangement fees, probably arrangement fees. Hopefully.
Well, no. So I guess application fees. But So very similar. We have similar terminology challenges just between states, so that you're not alone here in needing to be translated.
So that's the inexperienced developer is basically saying the things that are important are the things that go in my spreadsheet. The things that make me feel like that deal stacks. That's fair enough. That's rational. Those are important because you don't want to chase a deal that doesn't stack up.
Yeah.
You asked experienced developers what they want, because they know and they've been through the experience of so many times that they've done projects, they've had finance, etc. And they're looking at speed, they want transparency of finance, and I'll define that a bit more. They want access to decision makers, and they want ease of process, right? And that's not saying that those numbers are not important. They are important, but it's just that all of those factors are more important in who they look for their finance. And that, as we all know, learning from more experienced people is really helpful, because then we can think, well, when we're looking at finance, I should be looking out for those factors, not just the numbers that plug into my spreadsheet.
Yeah, absolutely. So I guess that was in the UK 5 years ago now, or maybe 6?
We started lending beginning of 2015. So yeah, quite a few years now. That's why I'm so grey.
And I'm so bald. So it's, what do you say, $500 billion?
Yeah. So yeah, £500 million, £500 million of projects that we backed, and sort of the sort of sub point behind that is a load of that is driven not only by the new developers that are working with us, but also those developers who have worked with us, they stay with us. So that concept that we came up with, that we want to be that partner, we want to be that funding partner for life of a developer, because, well, that's easier for everyone, right? It's less risk for us and it's easier for the developer to work with that team again. That's playing out. Exactly that. So that is driving a hell of a lot of our growth, as well as the sort of the new developer acquisition. And we looked at that and we said, okay, we've got to something here. We've proven this. We've proven that we have an edge. And the sort of way we go to market is property finance by property people. That's different. It's not property finance by a bank that will just think you're shareholders, yes. Yeah, exactly. So that partnership sort of positioning, right? And we felt that really resonated, and there were probably other markets where that was relevant. And so we started that exercise of looking in literally all markets in the world. Now you can rule out a load for being small or whatever. And we were looking at the Australian market, and we got pretty excited about it, because it's like, well, okay, it looks like the banks are acting like banks have and do in the UK, right? That's a good starting point. It also looks like there's a really vibrant sort of grassroots, small and medium-sized developments property entrepneurs out there that want to build stuff.
That's you guys, in case you were.
Exactly. And who are doing, and then there are markets like this and many other cities around Australia that say, actually one of the really important ways to build out our housing stock is through infill, it's through densification, it's through all of these things, which resonate exactly to small developers. So we sort of put all of that together. And we started looking out for a team here and found a brilliant team. So so David and Ian and all the teams sort of, executing on exactly that vision. Now, it's really important that you don't sort of rock up in a market, especially with an English accent, and say, right, well, the way we do it in England is exactly the way we do it here. Yeah. We adapt and we understand and we just...
I just want to qualify that, because I'm pretty sure that both David and Ian are English.
Yeah, maybe, but they've been here a long time, though. But yes, and the other teams. So you've got Daniel and Alan. They've developed a hell of a lot as well. And they've, the whole principle there is that we've got a team that really understand what it's like developing, what it's like being on the ground, what it's like being on site, what it's like, basically facing pretty difficult challenges every single day in your development job. Development is a brilliant thing to do well. It's a bloody stressful thing as well.
Absolutely.
And you'll always face challenges. And again, that sort of resonates to the fact that does the bank really understand that this is hard, that there are challenges, that actually, if you ever phoned up your bank and said, I've got this challenge on site, I'm not sure if you'd speak to a human, let alone a human that would know anything, right, or add any value, right? But that's one thing that's the supportive partnership point that we're sort of positioning as.
Yeah, absolutely. So what are the similarities that you're seeing between the Australian market and the UK market? I guess now that you're, firmly entrenched here, so 18 odd months in the Australian market, what are the similarities that you're seeing that are able to leverage the lessons learned from the UK very, very quickly?
Yeah, I think the big thing is that that pain is there, very, very similar pain by property developers. That need for infill sites and that densification. I think there are emerging things like, however you want to call it, boarding houses, HMOs, co-living, all of that, different provision of things. I think there are a lot of investors that are moving into doing projects, right? And those people doing projects, more and more of them are keeping hold of those projects as well. So it goes more end to end. It's still, they're thinking about long-term wealth building and developing something. The great thing about doing development rather than just investment, you're just buying something that exists.
And,
right?
and hoping, and paying retail for that, by the way.
Definitely,
yes.
Definitely. And that is basically buying something that exists. That did they think about the target market as well as you could, right? If you know your target market, you can start developing much more specifically for that, and you can build a better product than exists next door, that road, that suburb, right? And that means that you can start setting records, rental levels, room rates, or whatever the model is, and that's smarter because actually. Properties got quite competitive because there was, there was and is a reasonable amount of profit. Where there's a reasonable amount of profit, it attracts competition, right? How do you differentiate? Well, start thinking more strategically about who your target market is. Almost think about how like a retailer or a consumer business might think about its customers. I don't think that's ever been done enough in property. And I think that trend or that opportunity is massively there in this market.
Yeah, I agree wholeheartedly. I guess one of the challenges that I see in people transitioning from that investor mindset to the developer mindset is the fact that they don't actually think about that target demographic enough because they've been indoctrinated in the long-term capital growth side of things. But the drivers are very different in the development space. We're the makers of community, folks. You need to know what the community wants, where the community is going, how it's actually transitioning from the old product set to the new product set. When you understand that well, you can put the right product in front of the people at the right point in time. That's where you get your premium, and that's where you're investing at a wholesale rate, not a retail rate, which means that you get to hold the profit. You get to benefit from those higher yields and higher returns if you end up selling the product, et cetera, et cetera. So being smarter
Yeah, definitely. But that concentration on the customer is everything, right?
Yeah.
Think about that and design for it and build for it, and everything will only go well, on a cash flow and on a wealth creation in the medium long run.
Yeah. We were touching on it in a separate conversation not too far ago. The two major problems that we see in this space is how to find a deal and how to fund a deal.
Yeah.
Right. So how to find, how to fund.
Yes.
Right. So where to pick, where to go. What my target market audience is. Where is the supply and demand? Where's there disparity between those? And then how do we actually then go and actually execute that at the end?
Exactly, and that is, it's exactly the same in the UK, right? How to find it, how to fund it. Again, finding it is hard because it's competitive, right? There's lots of people out there trying to find stuff, right? How do you get an edge? How do you use data to find things better? How do you get more creative about it? How do you close those deals, right? You've got to really think about competitive advantage on every single element, because that means you're going to win each deal that you spend that time on, right? You'll be able to win that, right? So it's the finding piece, then there's getting the right funding partner, right? And then you're sort of halfway there, right? Then there's the build it bit, which is stressful and difficult, etc. But good news is you've got to it, right? Okay, therefore you found something well and you funded something well, okay? And the more of that you can do by approaching things in the right way, the more of the challenging and stressful build bit you get the opportunity to do, right? And actually, ultimately that is difficult. You need a great team around you. You need to learn from people who are doing it and doing it successfully. And then you create product, right? And then whatever you do with it, whether you're selling it, whether you're keeping it for a long term, whether you're selling a few of it so you can keep part of it, etc. So many different options, but that's what it creates for you. But boiling it down to those simple things, if people can do that, think about what my competitive advantage is finding it, competitive advantage funding it, and then how am I going to get through this bit, right?
Yeah.
So.
Understood. So in coming out, so you're out here for the week. So what are some of the things that you're trying to achieve in this week to try and kickstart our, the Australian market and what you're doing here? So first and foremost, spending a lot of time with the team. Because we've learned so much out of doing things in the UK. Doesn't mean all of that is applicable here, but we're debating a lot of things internally with the team about refining that product, refining that positioning, and getting out to market. Then I've got a few different presentations I'm giving. One is at the British Consulate, which will be exciting, and great opportunity to talking alongside PwC actually, and about housing and quite big picture strategic themes in this market. But also, there's something about real estate that you just got to feel it. You've got to be on the ground and really understand it. Have a look out the window and have a look at the sort of walk past estate agents and just sort of stare at things and just try and feel it a little bit more so I can understand it. It's really important that we've got the local team who do fundamentally understand it and really get that sort of grassroots element of the market. But I find it sort of super helpful to get out here and just feel those aspects. It's a bit like you shouldn't really invest in property where you don't really know that market, where you don't know the dynamics, right? Because why is that available? Why is that available at that price? You just don't have that quite that. Well, you touched on it before, data, right? And that's one of the things that a lot of people don't put enough time into is actually understanding how many opportunities there are in an area, how much demand there actually is for that product, what the demographic is actually looking for in that community. People don't look at the data. Data tells a story, and it's about being able to, like the Matrix, be able to read what the data is actually saying. And when you can actually do that, then you can almost predict the future and put opportunities in front of people before they even know they need it.
Definitely. And one of the things, we sort of urge people to just bounce deals off us, right? Not because we're not worried at that stage. It's like, oh, will we end up funding that or whatever, or how do we position? How do we help out? It's literally let us be a second pair of eyes. Bounce a deal off us, because there's nothing worse, right, than you sitting in a room for 3 months assessing a deal, and actually you've just convinced yourself into it because you've been optimistic on the GDV, you've been optimistic on the costs, et cetera, et cetera. Bounce it off us, because we've got a bucket load of data. We can compare it to so much in the market. To the extent that now we're seeing volumes of applications in the UK market of hundreds of millions of pounds worth of applications each month. So we've got machine learning models that attribute probability to, but then get validated by humans. You can't algorithm a development finance application.
No.
Okay? But you can use a load of data and analytics just to help quicken
to validate
process. It. Yeah, exactly, and they're the things that we're building into our to the Australian business here as well. And again, that ultimately gives competitive advantage as well, because it's just that speed of response. But just bounce things off. Look, we've got a passionate team, right? And they love looking at deals, basically. So we'll have a look at deals. And if it doesn't say, again, in the UK, 55% of applications, which will be in hundreds of millions a month, okay, they don't stack. That's fine. That's fine, because we'll go back and we'll say, hey, look, this GDV is a bit optimistic. These costs are a bit low. When you actually crunch those things together, there's not much of a deal here. Maybe don't waste more time on it.
Yeah.
Right? That's helpful. Right, good, get it out. If it passes the sense check, drop everything else and close that deal. Yeah. Right, because it's a cracking deal relative to billions of pounds worth of applications.
Yeah. So hopefully you're not waiting 3 months to get to that point, folks, in your process. But yes, absolutely. So in saying that, when is it too early to come to you with a site?
Yeah, don't just send us a portal URL.
Here's the address. What do you reckon?
Yeah, exactly. Give it a bit of thought, right? Have a look at the site, have a look at the opportunity, and it's basically the two things to work out and get to a level of comfort on. Ideally supported with the data that you can see in the market, and that is, look, what could this project be worth at the end? Okay, and how much will it cost me to go through that? Where we see the typical sort of shortcomings on those are obviously optimistic GDV. Well, that happens, but we can benchmark that.
So GDV, GRV, gross realised value. Yeah. So the value of the finished product. But,
yes.
So you want to do a bottom-up approach and also a top-down approach.
Yeah, exactly. There's nothing worse than being overly optimistic. We call it the sort of the property entrepreneur's optimism bias. You always want to make a deal seem great, but the reality is the only person you're kidding then is yourself, right? And ideally you want to just dismiss anything as quickly as possible, and we can help that. But have a view of that end value, okay? And then also just break down the costs. It can be high level. We're happy to have a high level conversation to start with, just to rule things in and out, right? But we can very, very quickly zoom into, right, okay, there are these challenges, there are these regulatory requirements or planning requirements in the local area, therefore you'll need to cost in this, or utility connections, or all of these sort of different things that actually might be missing from a sort of high-level cost analysis, right? Again, our conversations with developers don't start with, right, here's your formal application, and that's it. That's all the information you can provide, and if it's not perfect, then we're going to bin it. No, it just, let's start the conversation, right? But it requires just a little bit of thought, and then we can start the conversation, just refine it, and say, okay, that needs a bit of flex, that needs a bit of flex. Do you know what? This works. Okay, this works, and we can get to a level of comfort on it as well.
Yeah, absolutely. So you said something in there about a minute ago, but it kind of stuck in the head, and a tip I'll throw out to people. Most of us get a price that the vendor's giving us, and then we try to then add our costs into that and then squeeze our margin and get very optimistic on the sale of the GRV or GDV. And so we kind of squeeze ourselves. But the alternative approach is to do the exact opposite. Get very realistic on the GRV. And then, I guess, Robert Kiyosaki, Rich Dad, Poor Dad, rule number one, pay yourself first. So subtract the profit that you need to make out of the deal, then start subtracting your costs. then whatever is left over should be the maximum you would pay for that site. And I think a lot of people don't do that top-down approach. They do the bottom-up. You know, the vendor wants this. Can I optimistically live with that?
Yeah.
And when you say 55% come across your desk a little bit too optimistic, I'm guessing that they've done that bottom-up approach and not the top-down.
Exactly. In the UK, at least, that's called a residual valuation, right? So it's if I was to build this out with this end value, this is what I should be paying to start with.
Yeah.
It's a really important way to look at things, because not only can it rule in and rule out deals, it can also help discussions with agents and vendors, right? Because you know, a vendor can ask for anything they want, right? If the market doesn't bear it, then it won't go for that, okay? And never be that guy that goes and just, you know, the only one, the winner's curse. It's like, right, yeah, you know, it's the only way I can secure it is by paying that price. Have the conversation. Again, we can support that as well, but it's to discuss the rational discussion with the agent and the vendor to say, look, okay, the economics of this, right? And I've validated it by doing X, Y, and Z, etc. Right? The residual value comes out of that, right? I hope you can see the justification for my offer here, right? If there are other people in the market that are willing to massively overpay, hey, look, it is what it is.
Yeah.
There are more stupid people out there than you, right? So it's like, walk away from that one, right?
Yeah.
But thinking about that is fundamental.
And what you're talking about there is really open booking your conversation with the agent and the vendor. And I love doing that exact thing, but giving them loaded questions. So how much do you think the finished product's going to work, Mr. Agent? And you know, if they're an area expert, they'll tell you, this is what I think it's going to sell for. Great, let's use that as the baseline, right? So you're using their numbers against them, and they go, well, how much money does a developer need to make from an interest perspective? And they'll almost always say 20%.
Yep.
You go, okay, well, let's subtract that, because if I don't get that, the bank won't lend me it. If the bank won't lend me it, I can never buy your property. Do you agree with that concept? Yes. And then you start subtracting costs. That then they've walked themselves into a corner, right?
Yeah,
and
exactly.
and they go, okay, well, I can see where you're coming from now. But then there's still the stupid person who'll pay more.
Well, yeah, and that happens, right?
Yeah.
So, but we won't be backing them.
Yes, and neither will almost any other lender.
Yeah, exactly,
So
exactly.
good luck for that.
Yeah.
So if we were to give some, I guess, parting tips and tricks to our friends on the other side of the camera there, and I forgot to say earlier on, folks, that we are pre-recording this. Normally our Sunday sessions are live, so if there were any parting gifts that you wanted to tell everyone out on the other side of Facebook land and YouTube land, what would it be with the tips to how to actually bring a successful application through to yourselves?
Yeah. So I think we touched on them. It's like, come to us early, bounce it off us, right? We're fine to do that. Be realistic about things. Avoid this sort of property entrepreneur's bias, and that realism is across actually 3 dimensions. We talked about end value, we talked about costs, but it's also about timing, right? The timing is actually a sort of a very dangerous space. So we have lots of people contacting us saying, "I'm building this, and I'll be in and out in 12 months." Okay.
No, you won't. Folks.
Yeah, exactly. Yeah. Now, the danger with that. So our reaction to that is, well, we don't think you will. Well, therefore, we recommend doing the loan for this length of time. But if you are out in 12 months, then it won't cost you any more, right? Yeah. Okay. What it avoids is what we've seen in the market, which is part of the reason why transparency is really important to people, especially experienced developers, is that some people will say, well, great. We'll call the loan 12 months then. And by the way, in the small print, there are these penalty fees and penalty interest rates that if you go over the 12 months, they'll hit you, right? So, you know, be realistic about that. But again, we're happy to sort of feedback on that and strike it for longer or whatever. But watch out in case anyone actually does turn around and say, yeah, okay, 12 months.
Yeah.
Right. Then I think I touched upon competitive advantage being important. Okay, so you found it, right? You're looking to fund it. In that competitive advantage, part of that is speed, right? So if in our interactions with our team, you know, we'll ask you questions, we'll ask you more than the initial information we request. Obviously, we're going to dig deeper into it, and we're going to help make sure that it's a good project for both us and for you. You know, be accessible, right? if we're asking some questions, get back to us quick. If you miss our call or whatever, give us a buzz back. Whatever those things, because ultimately we're going to be asking a few more questions, but not 3 months worth of questions or 6 or 7 months of questions or whatever. But just be communicative, be responsive to that. Then we can serve you quicker, right? And then finally, one of the things I actually for another presentation a few weeks ago, I did a walk around our team in the UK, and I said, some tips. What do you like to see? And sometimes someone, I think the quote was something like, look, what I really like is a friendly, proactive developer that just that's just open book, tells us everything, gets back to us, and then we can help them super quick, right? And I think it was Anna in the team that was feeding us back that said, oh yeah, well, I was feeding back to someone the other day that I don't think their deal quite stacked, right? And he just got really angry, right? And so, well, actually we're trying to be helpful, but the bigger picture there is, as a developer, you've got to motivate all your contractors, your subcontractors, and everyone on site. It is a project management exercise, right? You are the conductor.
It's a people game.
It's a people game, okay? And if you're a person that just gets stroppy at the drop of a hat, right? Well, anyone, any lender, whether it's us or anyone else, will think, well, wait a minute, can that individual motivate and conduct the people that I need to be on my side to deliver this project, okay? And I thought that was a really insightful comment. We don't mind people getting stroppy. We're thick-skinned. We're okay with it, yeah? But it's like, maybe think about that, because it's
that's the English
people.
stiff upper lip. That's what
exactly,
that is.
Exactly, yeah. Yeah. Definitely. So.
Okay, so thank you for that. It's been, I guess, very insightful. From anyone, I guess, wanting to lodge an application, I guess somebody doing their very first deal, right? How do you treat someone doing their very first deal? Because everyone has to do deal number one, whether you're Tim Gurner, whether you're Meriton or Lend-Lease or any of those big, they had to do deal number one, right? So how do you treat a novice developer coming through the process, and do they get treated the same as an experienced developer?
So we're open and we fund first-time developers, okay? And that sounds, slightly, oh, really? Okay, great, but how do you get comfortable with that? Well, the way we get comfortable at it is back to this point. It's about the people, right? So we see people like, building contractors that may have built stuff before but never been the developer, the principal developer, saying, well, I have gaps, but I've got this deep expertise. It's like, great, okay, now build out the team, right? We see people coming in from, architecture that's, again, never delivered site. From any walks of business or private or public organisations, right, that clearly demonstrate an ability to manage something, right? It's just a project management exercise, right? And there's two of the biggest developers in the UK that we backed, and that we backed their first project. One was a doctor, okay, and I think his first words to us was, I've got some HMOs, boarding houses, right? I have no idea about development, but I want to do this £5 million development. Okay.
Well, there's a tick in the box right there, folks.
Okay, he's got kahunas, right?
Yeah.
But, okay, what he did was he recognised he didn't know about it, okay? And he came to our office and he brought his team. Right?
Yeah.
His team, his architect, his planning consultant, his QS, project manager, etc. They were all cut into the deal on the equity side, right? And he thought about that. Where are my gaps, right? And he filled them and he incentivised them, right? And that was super smart, okay? And we actually said, well, actually, you probably need this one other role as well. And we said that not to just tick our boxes, because we're not a tick box type lender. It was because we genuinely thought, with our experience, that would enhance the probability of success of the project. Okay, so we might suggest other team members, but we will look at non-property related skill sets. So the other developer that's actually one of our biggest developers in the UK came from he was in investment banking, IT project manager. Right, he can get stuff done. right?
Yeah.
And he had a passion for property. We could see his ambition to build a property business. All of those things, there's sort of like the experience, but there's also the ambition and motivation. What type of the person is that? Are they doing this just because they've stumbled across a development project, or do they want to build a property business?
Yeah.
Right? All of these things go into the mix and consideration, and not all of them we can just, say, oh yeah, that meets that. Actually, there are so many factors to consider. So we build a whole picture, a lot around the people, a lot around the team, and we can get comfortable. But also, as I said before, there's no wrong answer when you approach us. It's a conversation, and we might suggest some other roles in the team.
So you mentioned a lot of people who might have already got experience. We've got lots of mums and dads and novice and aspiring developers who, I guess, don't have that background in the industry. What would be the advice and guidance you give them, I guess, in coming to a deal in the first instance?
Yeah. Similar point, right? It's know the gaps, okay, understand the gaps, okay, and that takes a bit of time, but also just open up about it. And we're happy to suggest other roles to add to the team. It's your first deal will definitely be your worst deal, right? Okay, but your first deal enables you to do the second, the third, the fourth, and get better and better and better. And you're forming your team, you're working out who you want to work with on the next one, okay? So all of it gives you advantage for the second one, right? So, we get it, right? We understand that. We understand that everyone has to do their first deal, right? How do you do that? There's a chicken and egg problem here, right?
Yeah.
Again, it's a question of, get in touch, and we're here to have that conversation about the deal, not just tick boxes.
Yep, very good. Well, with that, mate, it has been a pleasure to get to know you. I guess we've been, talking indirectly through the team for quite some time, so it's good to actually see you over in the UK. Given that this is pre-recorded, folks, there won't be any Q&A from that side of things, but Mike, it's been an absolute pleasure to get to know you, mate.
Pleasure, Angie. Thank you very much.
And I can't wait for one of those hot beers at the end of the day, mate. So I can see you brought your English weather with you.
Exactly, yeah.
Yes, all good. Till then,